Topic 1. Auto Insurance. Part 1. Automobile Insurance and Society. In this chapter, we will talk about the source of the auto insurance to compensate the auto accident victims. And we will also talk about how the auto accidents are paid, the tort system, and the no-fault automobile insurance system. And we will also talk about the automobile insurance for high-risk drivers and how is auto insurance rate regulated. There are 6 approaches to compensate the auto accident victims. First is the tort liability system. Basically, you could sue whoever caused you harm in an auto accident. And the second type is the financial responsibility law, which basically says, after you have an accident, you need to set aside a certain amount of money to help to pay for the victim. The compulsory insurance law is an evolution of the financial responsibility law. The compulsory insurance law says you have to maintain a valid insurance before you can drive. Sometimes, even though you have insurance, it doesn't help to protect you, because sometimes if you're involved in an accident with an uninsured or underinsured motorist, you could be exposed to uncovered loss. So therefore, we have an uninsured motorist coverage to help to pay for hit and run drivers. And the underinsured motorist coverage will help to pay if the person who caused you harm do not have enough insurance to cover your loss. Finally, we will also talk about the no-fault insurance. So the first type of compensation is the tort liability system. The tort liability system basically says you could sue whoever that caused you harm. And it is based on fault, so you have to be able to prove that the other party is at fault. And it is the most commonly used to compensate those who are injured in the auto accident. The major advantage of the tort liability system is it provides a remedy for the victims of a negligent or irresponsible driver who caused accidents. And it will also help to incentivize the drivers to act responsibly, because if you don't, you get sued. Now, as you can imagine, the major disadvantage of the tort liability system is the legal transaction. It is time-consuming if the two of you fight in a court, and it can also cost you a significant legal and administrative cost. The financial responsibility law says it requires the motorist to provide a proof of financial responsibility when there's a loss. So after an auto accident, you have to set aside a specific amount of dollar so as to help to pay for the victim who has suffered in an accident. And it could also be after a conviction for a certain serious offense or upon a failure to pay a final judgment result from an auto accident. The advantage of the financial responsibility law is it provides some protection for the victims. And it also works in conjunction with the tort liability system to ensure the payment. So if the two of you are fighting in the court, and before the final judgment has come down yet, you would have to set aside a specific dollar amount, just in case any of you are proved to be at fault. Then that money will be triggered to pay for the victim. Now, the major disadvantage of the financial responsibility law is it only exists after the accident. What if after the accident I don't have that much money? What's the victims gonna do about it? And also, it does not guarantee the payment to all accident victims, and the injured person might not be fully indemnified just because the convicted person may not have enough money. The financial responsibility law has evolved evolved into the compulsory auto insurance law. So the compulsory auto insurance says before you could drive, you need to acquire auto liability insurance, or to post a bond or deposit cash or securities. And the auto liability insurance would satisfy the bonding requirement here. And the compulsory auto insurance law is enacted by most the states. Here in Kentucky, it is mandated that whoever wished to drive would have to have legal auto insurance to cover. The advantage of the compulsory auto insurance law would be it ensures that the accident victims are compensated for their loss, so it is before loss rather than after loss. However, here are a few disadvantages of the compulsory auto insurance law. First, it is not for all the accident victims. For example, if you're the victim of a hit-and-run driver, you cannot sue the person because you cannot find the person. And second, the compulsory auto insurance law only has an incomplete protection because whoever have the insurance would have an insurance limit, and that limit may not be enough to cover your cost. The injured person may not be fully indemnified as a result of that. Here in Kentucky, the minimum requirement for bodily injury liability is $25,000 per person and $50,000 for all the passengers and drivers in the vehicle. Do you think it is enough? Mostly not. The emergency room cost, ambulance cost, all the medical expenses associated with an accident can very well go beyond this limit. So if someone who's at fault only maintain a limited liability, which is $25,000, it may not be enough to cover your medical expenses. In that case, you may have to sue the person, which as a result may not give you anything if the person turned out to be very poor. And what about your medical expenses? Then you're gonna have to pay for yourself. So that's the bodily injury liability. And the property damage liability is $10,000. So if you hit someone and you only maintain a minimum limit, then you're only gonna have $10,000 to pay for the other person's cost. And the PIP, the personal injury protection, would be $10,000 limit. The PIP is actually not a liability coverage. It helps to provide a coverage for yourself. So it is always a good advice to maintain enough personal injury protection because it helps to protect you rather than a third party. The other disadvantage of the compulsory auto insurance law would be the insurance company would have no freedom to choose the profitable insured, and the premium rate as a result would be unfairly high for the good drivers due to the asymmetry of information. Because if the insurance company have no way to tell who is the high risk driver and who is the low risk driver, the high risk driver will as a result subsidize the low risk driver will as a result subsidize the high risk driver. And of course, it does not help to prevent or even reduce the number of accidents. The next type of compensation for the auto accident victim would be the uninsured motorist coverage. As I mentioned before, the purpose of the UM coverage is to compensate the insured for bodily injury caused by uninsured motorist, hit-and-run driver, the driver whose insurance company become insolvent. In certain states, the uninsured motorist coverage is mandated. In Kentucky, it is not mandated. The advantage of the uninsured motorist coverage is it's a very good supplement and it's strongly recommended that everyone should maintain an uninsured motorist coverage because it helps to protect you. However, there are several disadvantages of the uninsured motorist coverage. First, it only has incomplete protection. Unless the insured has purchased higher uninsured motorist limits, the maximum paid for bodily injury claim is very limited and is limited to the state's financial responsibility or compulsory insurance law requirements. Next, it also happens before collecting the coverage, and the uninsured motorist legal responsibility must be established so that the legal proceeding could be long and expensive before the uninsured motorist coverage may be triggered. Lastly, the victim will pay for the insurance because there's no incentive for the irresponsible uninsured motorist to drive safe. The next type of compensation would be the underinsured motorist coverage, UIM. The purpose of the UIM is to provide additional limit to protect the victim. And to be clear, it does not overlap or duplicate the uninsured motorist coverage, because the uninsured motorist coverage, UM, applies when it is caused by the uninsured motorist, hit and run, insolvent policy. However, the UIM applies only when the at-fault driver has liability insurance with lower liability limits than the limit provided by the injured person's uninsured motorist coverage. And therefore, whenever there is an at-fault drive existence with a valid insurance, uninsured motorist coverage would not apply. However, underinsurance motorist coverage would still apply. So the advantage of the underinsured motorist coverage is that it is a very, very good supplement. However, the major disadvantage of the underinsured motorist coverage would be still, it is insufficient, and sometimes you will end up using your own money to pay for your suffering and pain. The no-fault automobile insurance helps to pay for the victim. At the same time, it also helps to minimize the legal transaction. So with a no-fault automobile insurance, two people involved in an accident, A and B. A would go to A's insurance company to get paid, and B would go to B's insurance company to get paid. And there's no interaction between A and B. So an injured person does not need to establish fault and prove negligence in order to collect payment from damages. And it is developed to avoid costly and time-consuming process determining the legal liability. And it would also allow the auto accident victims to collect first-party benefit from their own insurance company. So the major advantage of the no-fault automobile insurance is it eliminates the need to determine the fault, and it also eliminates the inequities in the claim payments. It helps to expand the limited scope of the tort system, because under the current tort system, people collect less than full economic loss because they also have to pay for the legal transactions. It would also help to decrease the proportion of premium dollar used for claim investigation and legal costs because it does not need to. However, under the tort system, a large proportion of liability coverage premium dollar is used to pay for attorneys' investigation expenses and so forth. Finally, it helps to reduce the delay in payments because there's no legal transaction involved. However, there are certain major disadvantages of the no-fault automobile insurance. First, the premium saving on no-fault system sometimes is overstated, and it also penalizes the safe drivers, since you do not need to prove that it's someone else's fault. There is no way for you to prove that it is not your fault. and therefore it is impossible to know who's a better driver. So your insurance company may at the end increase your premium, which is actually not your fault. It would also not include a payment for pain and sufferings, so the dollar amount of expense does not always represent the true loss to the victim. So for the no-fault benefit, the personal injury protection do not include payment for the pain and suffering. And finally, the no-fault system may increase fraud, so that people would abuse the system by inflating the fees charged for services or charging for unnecessary services and procedures so that the claim exceeds the threshold. There are 4 types of no-fault plans. The pure no-fault basically says the injured person would not need to establish fault and prove negligence in order to collect premium, regardless of the injury's severity. The modified no-fault adds on plans and the choice of no-fault plans. Since the pure no-fault system would unfairly eliminate the right to certain legal actions, no states enact the pure no-fault law. So we don't really have the pure no-fault system in the United States. Instead, the states would use modified no-fault, add-on plans, and choice of no-fault plans. Many states would use the modified no-fault plans. It helps to prevent an insured person from seeking compensation for damages from a negligent driver unless the claim exceeds the monetary or verbal threshold. After collecting the economic loss through their no-fault coverage, the injured person can sue the at-fault driver for any economic loss that exceeds the no-fault coverage limits. About half of the states would use the no-fault laws would use the modified no-fault plans. So to verify what kind of loss there is, first, we need to know that there are 2 types of losses. First, there is an economic loss. It includes your car damage, the property damage, and medical expense. So basically, economic loss means all those losses that can be measured precisely by a dollar amount, including your medical expenses. The second type is the non-economic loss. It is the pain and suffering, etc. So all those damages cannot be precisely measured by dollar amount. So first, let's talk about economic loss, how you can get compensated. So as you see, there's a threshold. If your economic loss is below the state minimum threshold, you go to your own insurance company to get paid. If it is above the threshold, then you may sue the person who's at fault. However, you need to prove that the other party is at fault. For non-economic loss, however, if it is below the threshold, no one gets paid. So you cannot say, I have a $100 of pain and suffering. You cannot do that. It will have to go above the threshold before you can sue the other party to get paid. And your insurance actually pays none of the non-economic loss of you. So in Kentucky, the minimum liability threshold is $25,000 and $50,000. So $25,000 will be paid for one person in the car. $50,000 will pay for the whole passengers and the drivers in the vehicle. If your damage goes beyond the threshold, then you can approach the one who has caused you harm and sue the party. The next type is the add-on plans. It adds no-fault benefits to auto insurance policies, but it's different with no-fault plan because it places no restriction on the injured person's right to sue a negligent party for damages. So it provides a certain benefit to the injured auto victim without regard to fault. So you could sue from the first dollar amount. You could choose either to go to your insurance company and get paid, or to sue the person who caused you harm. The choice no-fault plan will provide you with an option of choosing to be covered on a modified no-fault basis, or to be covered on a tort basis. If the choice no-fault plan is chosen, then the insured will retain full right to seek compensation from the negligent party. However, the insurance company will charge them with a higher premium. Why is that so? Well, remember, if you choose to maintain your tort right, so basically if you choose to maintain the right to sue, the person that you injured would also have the right to sue, just to be fair, which would pose a large liability to the insurance company. Here is a very good summary of the rights to sue in the no-fault plans. First, under the pure no-fault plans, you have absolutely no right to sue. Because it deprives the person's right to sue, no states actually adopt this plan. The second type is the modified no-fault plan, which almost 50% of the states follow this plan. Yes, there is a restriction on the right to sue, and there's a threshold. It has to go beyond a specific threshold before you could sue the person who's at fault. The add-on plan actually places no restriction on the right to sue. You could choose to sue the person from the first dollar amount, or you could also choose not to sue the person and get reimbursed from your insurance company. And lastly, there's a choice no-fault plans. Basically says it only applies if you choose the modified no-fault plan. Next, let's take a look at the automobile insurance for high-risk drivers. Who are they? They are the group of drivers who violate traffic laws very frequently, and they're responsible for an excessive number of traffic accidents, or they could be convicted of certain serious offenses, such as reckless driving, driving with a suspended license, or driving under the influence of the alcohol or drugs. So why is it difficult to provide an insurance coverage to high-risk drivers? Well, they are very risky. They're risky not because of their higher average loss, but because of the high volatility. So high-risk drivers doesn't mean that they always violate traffic laws, and it doesn't mean that they always have accidents. They may have quite a few accidents in 1 year, and then following years they have no accidents at all. So their variance or volatility is pretty high. So it gives an insurance company a hard time to estimate how much loss they have. So the insurance company, to be safe, will consider these group of drivers a high-risk driver. They always violate traffic. So what happens to the high-risk drivers? They cannot obtain regular insurance in normal market. As a result, they go to a residual market. So for the drivers who cannot obtain insurance from a private insurance, a voluntary market, the states have created mechanisms to make insurance available in the residual market. So when they go to a residual market, what is their policy going to look like? And what about their premium? Well, their premium is going to be substantially higher than the premiums charged in the standard market, and the amount of insurance is at least equal to the state's financial responsibility or compulsory insurance law. So for example, a certain state said you have to maintain $10,000 of liability, then the amount of insurance provided for a high-risk driver is going to be at least equal to that amount. and many specialty insurers will offer optional higher limits. The medical payment coverage for the driver themselves may be very limited, and the collision insurance may be available only with a high deductible, so they don't get paid for their own vehicle's damage. Even though they get paid, it's gonna have a very high deductible. There are three types of residual market programs. First, there is an automobile insurance plan. It is often called an assigned risk plan. All the auto insurers doing business in the States are assigned their proportionate share of high-risk drivers based on the total volume of auto insurance written in the state. For example, if there are only two insurance companies, Company A and Company B, in a certain state, Company A has 70% of the market share, whereas Company B has 30% of the market share. In the automobile insurance plan case, A would be assigned with 70% of the high-risk drivers, and B would be assigned with 30% of the high-risk drivers. So if a high-risk driver has a loss of $10,000, how much would A and B pay? Well, we don't know, because we don't know if this driver is assigned to Company A or assigned to Company B. The next type is the Joint Underwriting Associations, the JUAs, and the third type is some other programs. The Joint Underwriting Association is a substitute of automobile insurance plan. So in a state that offers the JUAs, the Joint Underwriting Associations, all the auto insurers would pay a proportion share of the total underwriting cost and the expenses based on each insurer's share of the voluntary auto insurance written in the state. The Joint Underwriting Associations, JUAs, is a substitute of automobile insurance plan. In a state that offers a JUA, all the auto insurers will pay a proportion share of total underwriting losses and expenses based on each insurer's share of voluntary auto insurance written in the state, a portion of which can be used to compensate the servicing insurers. For example, an insurance company that writes 12% of the voluntary auto insurance in a particular state, they must pay 12% of the underwriting loss experienced by the JUA and 12% of the expenses, even though it is not required to insure the high-risk drivers. So the Joint Underwriting Association will set insurance rate, and the rate will be applied to all the high-risk drivers in the state, and they would together approve the policy forms. And they will designate a servicing insurance company for the high-risk business. So the servicing insurance company only do the underwriting and the claim adjusting. However, everybody in the state, every insurance company in the state, would share the risk. All the auto insurers in the state are assessed a proportionate share of the JUA's losses and expenses based on their voluntary automobile insurance premiums written in the state. So it's like no matter if you underwrite high risk or not, you will be bearing a part of the cost. So instead of sharing business, as we see in the previous automobile insurance plans, the JUAs actually shares the loss. Some other automobile insurance for high-risk drivers program include the reinsurance facility. It is the mechanism that allows the insurance companies to assign premiums and losses for high-risk drivers to a state-wide reinsurance pool. So the original insurance company will service the policy, not the designated insurance company. But all of the insurance companies in the pool will share the underwriting loss in proportion to the total automobile insurance premium they write in that specific state. The last topic we're going to talk about in this chapter will be the rate regulation. Now, since auto insurance is a compulsory insurance, the public will perceive purchasing insurance as a right rather than a privilege, and therefore the auto insurance rate is very heavily regulated. So the rate must be adequate to pay all the claims and expenses. And if a large number of applicants experience numerous claims, the insurance company may run into insolvency, and therefore the insurance rate must be adequate. And second, the rate may not be unfairly discriminatory. So when an insurance company have an insured that applies, the rate standard must be the same. You must treat every insured the same. You cannot give a discount to someone and raise the price to someone else if their risk factor are the same, which we'll talk in later. So the compulsory insurance auto insurance law have required the rate regulation to be necessary. However, the auto insurance companies are in business and they're in the market to make a profit. So because of the conflict of these two factors, the compulsory nature of the auto insurance and the auto insurance company's profit-making nature, the rate regulation will be very much necessary. So that government regulation helps to solve this conflict. The rate regulation is concerned with the several issues. First, the rating factors. What are the factors that will actually change the probability of having a loss? So those factors would be rating factors. And they would also match the price to exposure. And they would also want to maintain a healthy competition. The rating factors include the following. First, there is a primary rating factor, including age, sex, marital status, especially for males. The young married males tend to have fewer accidents than young unmarried males, and therefore the marital status for the young males is very important. Territory. The territory is determined by where the vehicle is normally used and garaged. Obviously, a rural territory often have lower insurance rate than urban territories. The use of auto. The premium will be the lowest for farm use and will be the highest for business use. And that is because the vehicle would have different places to drive on a farm or frequent business use. The autos are usually classified for farm, pleasure, driving to work, or business use. So as you can see, for farm and pleasure tend to enjoy lower premium, and for driving to work or business tend to have higher premium. The next rating factors would be the other rating factors that include a good student discount. Basically, if a student have a good GPA, it means that the student is usually responsible for a lot of things in his or her life, and therefore they tend to be a better driver, and therefore they have a good student discount. A driver education credit. As a young driver, you may complete an approved driver education course to get a premium discount. So young drivers don't necessarily drive a higher risk. However, because they don't have much of a past experience for the insurance company to rate them. So insurance company have no historical data to show if someone is a good driver or not. And therefore, insurance company tend to believe that this person is not a good driver. And of course, because young people tend to be less rational, so their rating could be higher than elder people's. Your driving record would obviously influence your rating. The type of the vehicle. Is there a lot of safety feature? Is it an old vehicle? How many vehicles do you have? Obviously, if you are a single person but you have more than one vehicle, the second vehicle is going to enjoy a huge discount because you can only drive one at a time. Deductibles. If you have higher deductible, your premium will be lower. Liability limit. If you have lower limit, but it has to be higher than the minimum requirement of the state. So the lower limit you have, the lower premium you're going to enjoy. Finally, that insurance company would have to match the price to the exposure. How do they do that? Insurance company usually have a table, and on the left-hand side of the table there's a rating factor. For example, your age. On the right-hand side, it would be the appropriate premium. So a certain age group will enjoy a certain premium group. Insurance company would have different rates for different level of loss exposures. And then they may divide applicants into 2 or more rating categories: the preferred, the standard, and the non-standard. And of course, there's a high-risk driver category that goes to the residual market. Lastly, they will match the price of the insurance with the level of loss exposure they have. Here concludes Topic 1, Part 1, the legal requirements and the environments of an automobile insurance. In the next chapter, we will continue to investigate the automobile insurance, but we will take a deeper look at the insurance policy itself.